you interview a lot of other great minds in the macro world. And I think your podcast is the gold standard for these type of long form macro interviews, Grant. And you are in a relatively unique position to talk to all these minds and then synthesize what you hear, right? And try to, pick and choose what resonates most with you and come up with your worldview. And I'm just curious, based on all those conversations, what do you see as like the big trends we need to pay attention to coming into this year?
We've been conditioned and reconditioned over the years to expect certain things to happen when certain conditions manifest themselves. And over again, we've had that reinforced. And that's why now people are refusing to believe the Fed about staying high and believing the Fed when they say they're going to engineer a soft landing. But, as I said in one of my recent presentations, that's the world as we wish it to be, but we have to invest in the world as it is. For the longest time, the world as we wish it to be and the world as it is have kind of merged. And so you've had this beautiful period where you knew that asset prices were going to go high, you knew that rates were going to stay low, you knew that liquidity was going to be abundant, and you knew that the first sign of trouble, the Fed had no problem stepping in, and that was just a wonderful place to be. And so now
you could borrow cheaply to leverage that ride too.
Exactly right. Yeah. I mean, all the things that come with zero cost of capital are tailwinds to asset prices, pure and simple. But now here we are, that's gone. And we've got, while we may not have positive real rates, we have a really good pay me to sit and wait rate of 4.5%, give or take. And that changes things. And so, along with that tailwind that I talked about, we've seen this enormous move towards passive allocation and the rise of passive in terms of a place where people are going to put their capital, and also the effect that passive has had on markets, which has been, as Mike Green says, if you give me money, I will invest it. So that, again, as we've seen that money come in, it doesn't sit around and wait for a good entry point. It gets put to work right away. And that's been another tailwind for markets. Now we're in a period where the professional investor, to kind of put a cute term around someone that just kind of does this and has done this for some period of time, is going to be challenged by the volatility you've just spoken about, the uncertainty that you've spoken about. And there's a reason all those guys you're talking to are saying the same thing. We just don't know what's going to happen next, and it's a challenging environment, because it is. And the kind of turmoil that inflation brings with the rising rates, the change of all the ways that we've been inclined to invest, we're right in that kind of whirlpool right now. We haven't been spat out of it yet. So I think smart investors are, as I said before, open-minded. And I think it's so important, because not just in our investments, but in everything around us, in social media, in our interactions with friends, everybody is so dogmatic about everything now. And this ability to change your mind is being reinforced as a weakness, when in fact, in the period we're about to go into, it's going to be an incredible strength to be able to take a view, position accordingly, and say, I'm wrong, I'm out. That is going to be one of the key attributes to possess in the next few years. And it's why I think active managers and people with tenure in these markets will likely outperform in the next several years, where they haven't perhaps in the last few, because we've had this rising tide lifting all boats.
Right. Great point. And, we have endorsed financial advisors that come on this program every week. We'll have them come on after this interview. They give people context, not only to what the markets are doing kind of on a week-to-week basis, but also they give insight into what an active manager is thinking in this type of environment here. And Lance Roberts, leads one of the firms, he's called this year the year of the audible, where you have to be, using an analogy from football, we just watched the Super Bowl last night, where you're going to have to come up with your battle plan, but you're going to have to be very sensitive to how the developments on the ground are shaking out in real time, and be prepared, like you said, to say, hey, you know what, I thought it was going to go this way, it's now looking like it's going this way, I got to readjust my strategy here.
No, I think that's right, and I think it's really good advice. And the other thing I would say, is, I've I've fought manfully over the last several years to not become another one of those guys that tells you, hey, you should buy this stock, or you should do this, because there's so many people out there that are happy to offer stock tips and give you specific trading advice and say, hey, I'm buying this and I'm selling that, and that's great. And it's been a really good environment to do that. But I think now more than ever, it becomes about the hows and the whys of what we do, not the what. And I think for people at home watching this, the days when you could hear someone suggest a stock tip or go out and buy an ETF and just wait and expect it to go up are gone. I honestly believe that they're gone, certainly for the foreseeable future. And so I think it's really important to understand how to trade and why to trade and not what to trade. I think the what is a really easy and in many cases very lazy solution. Just fast forward to the end of any conversation like this and wait for the stock recommendations, right? And there's been a degree of success in that. But more and more, I think, as we go forward, and the people who make those recommendations are forced to pivot and change and cut positions they thought were good because the data changes, and these tides that we talk about coming to a confluence change the way they have to position themselves. It's going to be very dangerous to just ask someone, what should I buy? And I think it's really important for people to understand that. I think that's one of the big changes now, is that people out there giving trading advice and stock tips, if you're listening to them casually and you don't subscribe to people's service and you don't follow everything they write about that particular position once you've taken it on, I think you're at a very serious risk of them saying to their subscribers or their customers or their clients or their investors, we were wrong about that, we've cut it, we've moved on, we've gone short this thing that we bought because something's changed. So I as I say, I've tried very hard not to go down that road for the longest time, and I think it's really, really important that people understand how complicated things are right now, and don't fall back to relying upon someone to tell them what to do. Try and learn how and why.
John Hussman says bubble markets force you to make a choice, to look like an idiot now or look like an idiot later, right? So they all felt like they were geniuses, right? Oh, I'm just throwing money at ETFs and they're all going up. Look how easy this is. I'm great. And honestly, most professional investors, I think, developed that muscular too. Most financial advisors did. And so, and I believe I've heard you say this before, and it's a little self-serving of me to ask this question, but I believe in this type of market, you feel like unless you are an experienced investor and are aware of all the things we're talking about and have already developed this musculature, you're probably better off picking one of the advisors who has the long-term experience, has a process in place to be able to be nimble like this. And therefore, the picking of the advisor almost becomes more important than the picking of any particular stock or ETF at this point.
Good friend of mine, Lee Robinson, who I interviewed in the very early days of Real Vision, super guy. Really smart investor, very, very savvy man. I asked him, I said, what's the difference between professional investors and amateur or retail investors? What's the key difference? And I'll never forget what he said to me. He said, professional investors know how to sell stocks, how to exit positions. And he's absolutely right. Because this idea that you get something right and it's going well for you, there is still a time to exit. And if we do have, kind of choppy markets that go sideways, you better get those entry and exit points right if you're going to make any money. Otherwise, you're going to just ride this horse to the end of the thing and be back at the starting line again and have inflation eat some of that out of the way in the meantime. And of course, the flip side of that is there are going to be plenty of opportunities to lose a lot of money in between now and then. So it becomes a time to, getting back to your question about the advisor, understand what your goals are, and then find an advisor whose trading style and experience will help you achieve that goal. And for me, I think the most sensible goal right now is to pare back your expected return profile and concentrate much more on the defensive side of the ball and say, okay, I'm up, 50% over the last 3 years, despite there being a global pandemic. That's not because I'm a brilliant trader. That's because governments around the world threw multiple tens of trillions of dollars at this market. That's why I'm up 50%. It's not because I'm a genius. Now, the next 5 years, if I can hang on to that 50% gain I made, fantastic. If I can make that 50% over a 10-year period instead of a 3-year, 4-year period, it doesn't matter. That's still a really good return.
Right.
I just don't want to give it back.
I think it's safe to say we're now in a period of disinflation, right? That inflation peaked, I think, last June, at least here in the States. It's coming down. Still a little TBD on how fast it's going to come down this year. I think you'll see people argue both sides of that equation. But the trajectory seems to be down at this point. How big of a factor do you see inflation being this year? Do you expect it to be a little bit more stubborn, or maybe like our good friend Stephanie Pomboy, are we understandably worried about inflation because it's the dragon staring us in the face right now? But should we actually be more worried about the deflationary dragon that may be arriving soon?
Look, and the answer is both, right? The answer is both, and it's the sequencing that's so tricky. And this is a big change. We've had deflation's been the only thing we've had to worry about for the longest time, and so inflation was never a concern. And even though the numbers just from base effects are going to drop, we're not seeing that in the real world. We're still seeing, in the UK, it's like 1976 all over again. Everybody's striking for more wages. I'm much more worried about the inflationary problem returning. And I think the Fed is too, to be honest. I think they know they have a playbook for deflation. I don't think they're worried about that because they've had through 15 years of experience. Oh, if deflation, then X, Y, cut rates, QE.
And if I just interject, that Powell actually said that in his press conference from 2 weeks ago, whatever, where he basically said, I'm willing to err on the side of over tightening here, because if we create some issues there, we know how to fix those.
Look, exactly. And look, and markets know what to expect. This kind of learned behavior is everywhere. And look, one day it won't work, and one day they'll pull out the deflationary playbook, and it won't work because inflation is too entrenched, and people start to react differently to different stimuli. So, it's for me, I'm more worried about inflation because if deflation returns, yes, we know the problems it creates, and we know that there are things they can do. But if they do cut too soon, and inflation comes back with a vengeance, which it might well do that, I think that's a much bigger problem. So I hope Steph is right, but I think you have to prepare for inflation and the problems that brings, because that's, at this point, is a much bigger threat, I think, in the short term to global markets and stability, particularly on a social level, than deflation is right now.